Hello traders, hello investors, how are you doing today my friends? Welcome to another video here in the Finance Hydra channel. Let's analyze the SPY and the QQQ today. Let's take a look at how the indices are behaving right now. They are both going up sharply. We have a lot to update. So if you are new around here, remember to subscribe to this channel because I will do daily updates on SPY and QQQ in this channel. And if you are already my subscriber, remember to click on the like button because you know that our content is pretty damn good. So let's analyze how the SPY is looking right now. When we look at this, let's do a complete multi-time frame analysis on SPY. Right now it's going up sharply. Today it did open at a gap, doing a very nice gap down here. Maybe it is a runaway gap, maybe. And if that's the case, we have more upside potential, more room to go up, potentially to the 21 EMA in the daily chart. Back to the 1 hour chart, we see that we are already above the EMA in the 1 hour chart. And what's more, the EMA is working as a support level today. That's quite interesting. Of course, we still could see pullback. Yes, we could see, However, what could trigger a pullback? I believe if we lose today's low. If we lose today's low, this black line over here, this thin black line, I believe the SPY is going to trigger a sharper pullback and it's going to fill the previous gap down here. And that wouldn't be all bad because there would still be a very decent chance of the SPY doing a higher high, higher low. When we look at this, this is the pattern we wish to see on SPY. If it fails, if it shows some weakness down here, it could fill this gap. And if we see any reaction in this area, it could trigger a bullish pivot point all the way up to its EMA in the daily chart. That would be a very nice scenario to work with. And I hope that could possibly happen, but I don't know if this will happen. I don't need to know. All I know is that we are going up today. Now, since the trend is slightly more bullish than bearish in the short term, we can assume that the SPY is going to retest its EMA in the daily chart. And why do I assume that? Because it seems the SPY only dropped because of panic, okay? Only because of the problems regarding Ukraine and etc. And when we analyze QQQ, we have a similar situation. QQQ is above its EMA. Its EMA is already starting to point upwards. The EMA worked as a very nice support level for us over here today, multiple times, 1, 2, 3 times. If it does a pullback, I do believe we're going to fill this gap, and this is it. Then we will see how to proceed. Okay, but so far so good. So far they are both going up. So far I believe both are going to retest their EMAs in the daily chart. When we look at the weekly chart, we see a quite nice bullish candlestick pattern over here. Last week we did a bearish engulfing on QQQ and on SPY. The SPY is more bearish than QQQ because this bearish engulfing occurred just below its EMA. So yeah, that seems catastrophic. But if we see any bullish structure like a pivot point in the 1 hour chart, we will have decent chances of denying this bearish movement in the weekly chart. What's more, we could even possibly deny this possible head and shoulders chart pattern which we discussed yesterday. Let me find the head and shoulders. Can you see, guys, this head and shoulders? If you ask me, in my humble opinion, I do believe the indices overreacted over this Ukraine thing, okay? I hardly believe you're gonna see a new Third World War. I do not believe that's going to happen, okay? I don't believe the markets are going to crash. We're gonna see, I don't know, a huge, enormous bear market that could last for 20 years. I don't see this happening, but what I know is that the market is already pricing everything, okay? Guys, let me look at you for 1 second, okay? This is important. Guys, what you have to keep in mind is that the stock market, the indices, are leading indicators. They are leading. They are not lagging indicators. They are not coincidental indicators. They are leading indicators, meaning they're always trying to predict They're always pricing the future, okay? If you say, oh Nathan, but we have the war in Ukraine, we have, I don't know, many bad catalysts like inflation, like the bonds, like the Fed, which is ruining everything over here. We still have many macroeconomic problems. Yes, we do, but the market knows that. Again, indices are leading indicators. They are already pricing this if this is not already priced. What you guys have to know is that we gotta learn with the past. For instance, when COVID exploded, let's get back to the charts. In the weekly chart, back to 2020. When COVID exploded, the market dropped 1, 2, 3, 4 weeks. And then March was its bottom, and since then, we are doing nothing but going up. Did the pandemic end over here? Of course not. The pandemic is still going on. But the market priced all the future implications of our pandemic in 4 weeks. So this is why you guys gotta understand. I see some experts, right, which are always saying about the Fed, about economics and etc. Guys, nothing of that really matters for traders, not even for investors. Okay, that's not the most important thing. I have a theory that only the gurus like to talk about that kind of stuff so they can feel themselves a little bit more important, because when we analyze the real price action, the market seems to not care too much on the long term about all of that. Not right now at least, because in the past, if you look the subprime crisis, if you look the 29 crash, yes, the market took longer to react, yes, but it seems the market is getting faster and faster in pricing the future, thanks to algos, thanks to HFTs, and I don't know, many other stuff going on. The markets are already pricing the future fairly quickly, so I do not believe this is going to be the end of the world. And if you ask me, I think the war in Ukraine, all of the geopolitical tensions are mostly priced. It feels so, at least, okay? And right now, if you ask me, the S&P is just doing a pullback to its EMA. Oh, but Nathan, is this a dead cat bounce or not? I mean, we could do a dead cat bounce to the EMA and drop again to the 428. Yes, we could. If this is a dead cat bounce or not, I don't know. Not a living single soul on earth can possibly tell you that. What's more, you do not need to know this if you want to be a profitable trader. Regardless of what happens over here, you can always react properly to the moment. If you want to be a successful swing trader, I recommend you joining our newsletter, the Finance Hydra Trading newsletter. Join us over here among the 5% of the traders that can actually beat the market with consistency. That's our tracking record. If you click over here on read more, you will be redirected to this document, which is telling you every single one of our trades. All the data you need is here. Our past performance, the S&P performance, our alpha, risk reward ratio, worst week, best week, and etc. So far, week 7 is ongoing. If you want to have access to all my future recommendations, remember to go here and subscribe at our newsletter. I hope you guys are going to like our content. Now, the SPY and QQQ. Remember, we gotta wait for a bounce back up to the EMA. If this is going to be true bounce, a dead cat bounce, or a reversal sign, we will know when we hit there, okay? For now, I think I am neutral on the indices, but we should wait patiently for more signs. If the QQQ and the SPY, if both do a bullish structure, like a bullish pivot point, that would be perfect. That would be the ideal scenario for the rest of the week. I think we're gonna go up nicely. However, right now it's quite rough, okay? The volatility is pretty high, so caution is the word here. Okay, my friends, thank you very much for watching this video. I will update you guys tomorrow on our next video here in the Finance Hydra channel. Stay safe, farewell.